And we are live here, 5/17/2019. It's our daily halftime report on YouTube here with Coach Noah, Coach Cody, and myself, Tim Justice, one of your hosts and coaches out here at Tackle Trading. The market is taking a pause here, guys. We're going to break down all the action. It is Friday, fun day. Noah, you feeling like you're in a fun mood right now?
I'm always in a fun mood.
Yeah, Fibonacci fun day, Friday fun day. These guys want to do an hour of Fibonacci's, and I threatened, to leave. So it is what it is.
Not a joke.
Yeah. Cody, how are you doing, young man?
I'm doing great. A little tired, but doing great.
You know, I read today that it was National Reef Day and Reef Appreciation Day, and out there in Hawaii, you've probably gone fishing or even snorkeling and swimming there in the reef, right?
Yeah, we've gone snorkeling. We're probably going to do it again this weekend.
Yeah.
Brother-in-law,
do not wear the wrong sunblock.
Check all the boxes.
Do not wear the wrong sunblock. And while your brother-in-law is there, you should check all the boxes for sure. When I was out there in Hawaii, I guess one thing that happens is people go swimming in the reef. They've got all those chemicals on their sunscreen, and that can affect it negatively. Have you heard this?
I have. Didn't even think about it.
Yeah.
I'm also bad at wearing sunscreen in general, so.
Wear the right ones, get the right stuff, ask a local, go down to, what's the local shop there in Hawaii that's everywhere, the corner stores they have?
ABC store.
The ABC store. Go to the ABC store and ask them. Get yourself a nice spam musubi while you're at it. If you don't know what that is, you will soon. S&P 500 is down 0.25%, only 7 points. Actually, this morning, Noah, when I woke up early, 5 o'clock in the morning. I'm an early riser kind of guy, usually a morning person. And I start doing some reading and writing, and I check my phone, like Jake Pelly was talking about the other day. You know how a trader does, quickly check the phone to see if the market's crashed overnight, right? And then it was down 0.5%, so not a crash. And I'm thinking, well, we might have a pullback day here. We still got the cash open, the futures open. We've got all that action to the open, but kind of resilient. I'm not surprised, but I thought we might be selling a little bit harder into the open after the overnight stuff. What's your reaction on the chart here?
Well, it's been trading down overnight just about every night. Like, I'm watching it consistently, doing the same routine, checking the phone first thing. And I noticed that it trades down and then it opens and it's been running up. And today is really not a lot different, except for it hasn't recovered the entire amount yet. So you're seeing a bit of a red candle there. And it's right at the crossroads of the 50-period moving average, the falling 9-period moving average. And it is kind of in that kiss goodbye zip code where you could see that could be a kiss goodbye setup. Looking a little bit like a bearish retracement with the run down and the rally up. But like we were talking a little bit earlier while we were prepping, Tim, it kind of feels a little bit more neutral right now.
Mm-hmm. Yeah, it's feeling that way to me. I read an article from a technical analyst, which obviously I always take with a grain of salt because you get 10 chartists in a room. They're all going to see it slightly differently, right? Yeah. The basics of price action the same, but he was very cautious to his readers saying, hey, listen, I don't know if we're going to hit new highs this summer. And I actually kind of agree with that. I don't know either. Obviously, nobody knows the future, but you have to operate on current information. When you have the pullback, the depth of the way that you did, and it's all trade news, right? The trade fears and then the trade resolution. Now here we are on a Friday, and I think Wall Street's probably just kind of tired here today. A lot of back and forth for the last 2 weeks. We're now sitting at 28.72. If you take back the last almost 6 weeks of time, Noah, we're almost the same point we were in 318. We're slightly higher than that, but we've had a long rally, then a sell-off, now a little bit of a retracement, moving average congestion. Could you make a case for slightly neutral here?
Well, I could make a case. My portfolio is neutral. My delta is quite low, and my theta is working for me. So, and a lot of that came from adjustments I made as the market dipped. But I'm pretty neutral, and I've got a little guy who's screaming in the background, if you can hear that.
He's not neutral. He's saying stop loss.
He wants his mama.
That's right. I get it. Cody, your technical read on the market. You obviously do our newsletter each and every week over there at Tackle Trading. You're actually taking the week off this week. We got a new coach coming in, Marquise Johnson. I'm excited about that. But what's your read on the S&P? You're ranking it yard marker wise. Where are we at?
I'm probably coming back to the 40. So still on the bullish side, just because I see the overall movement that it has been doing. Can't just change all my sentiment all at once just because we had 2 weeks of being down. So moving into that neutral range of the 40, but still obviously on the bullish side of it. It's sitting right at the 50 period moving average, which is a big one for me. And just like it did last Thursday and Friday, where it kept wanting to pop above that. Well, today it seems like it just wants to test that. I want to see it, close above it with some strength or close below it before I really start leaning too far to the bear side.
Yeah, I can understand that. Pull this back to a weekly chart here for a minute, though, Noah. So the 40 is still a neutral to slightly bullish call on the big picture chart. So if we go down, 3-year weekly, is that a funky triple top? Or am I trying to see something that might not be there?
Well, isn't that what we do? We see patterns where patterns may or may not be. That's part of the human condition. We're really good at seeing patterns. So I see a double top for sure. Funky triple top. Well, I'll get back to you on that, because that wouldn't have to come down and break some levels of support to really be defined as a top. I probably wouldn't overthink this until it again breaks the 200 daily, which is close to the 50 weekly. Those are in the exact same ballpark always. And again, a little bit more down before I feeling like this is top heavy, because right now it still feels like a pullback, and you're a couple days rally or a week's rally from that turning into a cup and handle breakout. Like you were saying, Tim, it may be difficult for this market to make a new high, but I could see a case where some tweets and some trade deals come through that send this market higher. Now that's kind of contingent on a catalyst that would energize the market, but technically speaking,
more rational than that. It's not going to move off of tweets. No,
markets are rational, perfectly rational.
What are you talking about?
Yes. The market can stay irrational longer than most traders can stay solvent, right? It's a nice little pullback, and it looks like a nice, little hammer off the moving averages from that perspective. But you have to respect that resistance, and then the volume uptick on the downward sell-off certainly gives me a pause, and really makes me pull my personal bias back down to neutral. So, weekly chart kind of makes me want to take the bullish case, but the daily chart keeps me neutral.
Yeah, there's a lot going on there, obviously, between weekly and then intraday as well. And we'll kind of talk about markets as we go here. S&P 500, there's several companies I think we got to talk about first here. One of them is Applied Materials, S&P 500 component. AMAT is on the Tackle 25 as well. They had earnings last night. One of the sole companies actually showing a lot of strength, and it is up about 4% today. Now, you've got semiconductor volatility all over the place, Noah, but you got to like the fact that we had a positive reaction to the earnings. Give me a read on this AMAT chart.
Well, nice little pop up above all the moving averages, still below the most recent resistance pivot. Little doji action today, so that creates kind of a, after the gap up. I usually look at the bottom of the candle and the top of the candle after the gap as kind of the lines in the sand to watch to see if it runs. So I take that down into an intraday chart and look at it and go, okay, well, that's the gap up. And here I've got the continuous. You can see there's not a gap when you look at it continuously, but you got a resistance, you got a support. And now I've got those two lines in the sand where I just say, okay, hey, if it takes out resistance, we might have a runner. If it takes out support, might fill a gap. But until I get new information, that's how I plan. I usually don't take a reactive trade to it until I see it take out the daily high or low.
Under Armour making big moves here overnight, and it actually carrying through very well. JP Morgan's one of their analysts, UA or UAA. You can look at either one of the symbols. But UA, obviously the product is one Matt wears all the time. People who are loyal to Under Armour, they're really loyal to it. Came out with some positive notes here, Noah. A breakout of that earnings kind of gap out point would be interesting to me. You've got some noise back in the back. Do you buy and use Under Armour?
I've got a couple of pieces of Under Armour, but I'm not so loyal. I wouldn't wear Nike or something else. Yeah,
that's kind of how I am. I mean, I know that they compete a lot, in obviously all the big names that they're trying to get signed between them and Nike. Give me a quick peek at Nike as well. Let's see what's happening with Nike on a day where their competitor is up.
I'll tell you what; those college football teams really make a big deal out of who's sponsoring their uniforms.
Yeah.
So
Nike's up, but looks neutral to me.
Yeah, it looks pretty neutral. I mean, that's kind of smack dab in the middle of support and resistance. Filled its gap, sitting at a couple of the moving averages. You got the 50 and the and the 20, but it's up above the 9 and the 200. So I mean that's about as neutral a read as I come across. They got a dividend coming out, so if you're owner of the stock, you get that lovely little dividend, and then earnings is quite a ways out towards the end of June there.
Another stock that had earnings last night is NVIDIA. We did talk about it in the pre-production. We talked about it yesterday with Coach Mark as well. AMAT, yes, had good positive results. NVIDIA, not much here.
I just want to shout out for all the loungers. Yesterday in the lounge, we put a little short strangle on the NVIDIA here.
Now.
And let me just show you this. I did it in this virtual account here. And it's up $216 overnight from a simple short strangle. So not too shabby. The stock price didn't move. It had a $10 market maker move priced in, Tim. And its price action today has been pretty nominal. And from what I gathered, the numbers were okay. It sounds like they had a pretty good little earnings announcement, but the stock price has not really moved in kind.
Volatility in Vegas strategies, especially, first of all, this warms my heart to hear that our community is embracing the idea of earnings plays. And in the chat, everybody put in the word naked strangle. Short strangles are when you sell a call and a put. And yes, Noah, we do trade naked. We do that quite often.
I have to put a disclaimer in this video.
Oh, yeah.
Is YouTube going to flag us for having naked all the time in the chat?
Yeah,
I don't think they understand when Utahns say naked.
It's true.
It's true.
Yeah.
Other people.
No, we have had a video get flagged for naked being in the description before.
Was it naked baby or naked put?
Naked baby. I remember the naked baby. Yeah. That's funny. I doubt we're going to get flagged in the chat, but that'll be interesting. You never know. I can't figure out all these algorithms these days, guys. It's kind of silly how things work. Remember when we got flagged for playing that South Park thing?
Yep.
And it's gone. Yeah, that's right.
It's gone.
Yeah, that's right. A couple of healthcare stocks that are grabbing my attention. Silly how things work. Remember when and that's okay. A couple of healthcare stocks grabbing my attention here that are showing me some reversal characteristics. Humana, I've been bearish on for some time now, Noah. Now you tell me if I'm seeing this right or wrong. It feels like a little bit of an adjustment to the trend, in my opinion, with that candle today. You're riding the moving averages down, and all of a sudden we've got two big, strong green candles.
It did. It looked, again, like it had a nice little downtrend forming. This may actually be enough to violate the little downward trend channel. And that makes the low over here a little bit higher. And so we're still in a kind of a situation of higher low, possibly lower high. But that's got the look and feel of a forming reversal pattern. And the fact that it's crossed up above the 20-period moving average and maybe violated that downward trend line, depending on how you draw it. If it can close near that high, that might call some bulls to action.
Yeah, I agree with that. Some of the bears that are really, really popping out to me, look at Wynn Casino, if you would, WYNN. When, it was such a blast out, when you had positive trade news, the casinos started running, Las Vegas Sands and Wynn Casinos, and because of all of their business interest in Macau. But now here we are, Noah, where that trend kind of is failed a little bit. You're coming down to a pivot point. You're coming down to some support locations. You're down when the markets have been holding. It's got real bearishness kind of built into it to me, that if this thing breaks and runs, it's got a lot of room to the downside. Give me a read on that chart. And how much would that support at like 115 play into your thinking?
Well, it's certainly playing into my thinking. I mean, right now I'd be watching that 200-period moving average. And I might do something, Tim, on a trade like that where I might leg in, because I think that 112 support, 115 support zone you're talking about in that ballpark certainly factors in. So, if you're trying to take a play off the 200-period moving average, you're probably going to run into that old support resistance zone. But if it breaks that, I think you got a pretty clean drop to the century mark, 100, just as a psychological barrier, and you've got the lows down at 90.
Yeah.
So that's an interesting chart, deep pullback, and I think it's really quite susceptible to all the Chinese trade talk. They've got a lot of properties and interest over there. So
yeah, it's kind of like what Mark talked about yesterday. Some of these companies that are susceptible to it, you can build a bearish watch list for, and the ones that are kind of, can avoid it. They're sheltered from it, like Match.com or local US companies that don't have anything to do with Chinese trade. I mean, there's still bullish opportunities in the market. This is a stock pickers market. In fact, in the chat, I want everybody to type in stock pickers market. And that mindset is that you can go into the market when it's neutral and you can find theta and vega and delta and different opportunities. You've got to run a balanced portfolio in a market like this. We had a screaming bearish market in the fall. We had a screaming bullish market in the first quarter. I think the summer might be for theta. Noah, you said it very well there a couple weeks ago. There's some really stocks that are selling, guys. I'm not seeing only strength here today. Take a look at Corvo, QRVO. Broadline semiconductor companies down when NVIDIA's, had their earnings and AMAT had their earnings, but then boom, here we are falling off the map here, Noah.
QRVO. For whatever reason, that makes me think of Cuervo.
Jose Cuervo. Yeah.
Tío Jose. Yeah, that is definitely selling off. Big gap momentum. That's a lot of downward momentum. And that's one of those things where you could probably trade the momentum on that. Just triggers below candle low, trail stops. It's going to come down into a congestion zone where you've got a lot of support and resistance down in here, the $60 mark ballpark. Mm-hmm. That between that and kind of 55, but that's a lot of downward momentum.
Yes, it is. Yes, it is. And I'm seeing weakness on many, many stocks across the board. One last one on the S&P. Give me a look at Apache. They've been trying to get this deal done, sitting at 30. There's some congestion here. I think we're waiting on some settlement on that. A break below 30 would not be good news for that company. Give me a quick look at Alcoa, AA.
I'm still looking at Apache.
Yeah.
Hold on. I want to talk about Apache for a moment here. That's got a nice little clean breakdown there below 30, below 29.60-ish.
I do.
That is a good low base bearish pattern. That might wind up on a scouting report. I don't know. If it's contingent on some news on a deal, but from a pattern perspective, that's a pretty setup.
You do like those breakdowns for sure. When a trend fails, finds a low base, if it breaks, you've got a clear trigger. One thing we love about directional trading when you're a delta trader is clear triggers, okay? In the chat, type in clear triggers. We don't like the mess. When it's noisy and messy, we do Vega or Theta, Noah. When we have clear triggers, we tend to do Delta. Look at Alcoa, how the great have fallen. I got to tell you, remember when we started trading, Noah, you started way before I did, about 3 or 4 or 5 years. But Alcoa was the big dog. I mean, they were like the biggest materials and metals company out there for such a long time. Look at this chart. I mean, it has just been ugly and bearish and nasty. They've been fading. Their sales year over year is actually up, but their EPS numbers have been flat to down. They had a couple of really bad years. But this whole international trade war and tariff stuff is affecting companies like Alcoa. That's an ugly chart, don't you think?
Yeah, very specifically. I mean, that's a big extended downtrend, protracted downtrend. Low base, breakdown below 25 zone, I think bodes that, you got some weekly lows back here at like 21, but that's a big support zone. And if it breaks down, you trade the trend. The trend is your friend.
Yeah.
I like a setup like that. I like a trend like that, especially when it's got some room left to the downside.
Mm-hmm.
So, yeah.
Give me a look at the Dow Jones Industrial. Let's move through the indexes here on a Friday fun day. And by the way, if you're watching our show here today, it's always good to have the halftime crew. I know it's a lazy Friday. You could be playing golf. You could be working in the yard. You're here learning the markets. I think that's pretty awesome. Hashtag Team Tackle in the chat there, obviously. And if you don't subscribe to our channel yet, give it a quick subscribe. Make sure that you get alerted when we get in here in the future. Dow, I'm officially moving this one in my personal rankings to neutral right now, Noah. There's nothing in that chart that inspires me one way or the other at this point. What about you?
Well, it's between the 200 the 50, and it's hanging out with the that downward 9 moving average. And it's got a doji to boot. So smack dab in the middle of support resistance between major moving averages. Go fish. It's just that's very neutral.
Yeah, and we've talked about the components of the Dow. I mean, you've got some strength, but we've got major leadership that I think is very disconcerting. Look at Boeing. I mean, Noah, this is a bear retracement developing here on Boeing. I know it's up 1.2% today, which is a nice little candle, but you've got a breakdown below support, rallying back into old support. That's the kiss goodbye pattern. Classic technical condition. Now, it might be one of those that needs doji or something like that. Might not be developing till mid next week, but give me a read on that chart.
Just that. I mean, breakdown below the 200. Lots of downward momentum on the drop. This is a corrective rally. The volume has waned a little bit on that. This is one where there's probably not a day that goes by, Tim, that I don't see a headline on this.
Yeah.
Some speculation, some news, some questions. Clearly there's some concerns for the company. And then from a technical perspective, it looks like a bearish stock pickers, setup right there. Kiss goodbye setup with a 200 period moving average and a falling 20 period moving average. Yep, absolutely.
I like the congestion on Disney. I think if you break above this little consolidation, it's looking pretty good right now. Such a strong company from that news over the last few months, and had earnings, kind of the timing all got thrown into question. But now you're sitting here on a basing pattern where it's shown the ability to go to new highs, Noah. I would like a little trigger there, but not bad.
Well, I like that. And I was just yesterday, I was looking at the fundamentals on Disney, Tim. And, there's a lot of fundamental metrics out there, but it's got a PE ratio of 18.5. That's a pretty fair value Disney.
Yeah.
And so, you look at those little infographics on the number of companies that Disney owns, number of corporations they own. I mean, they are so well diversified in their field, and they're adding new revenue streams all the time. I like it. I like it a lot.
Yeah, I as well for me. Definitely a watch list candidate. You can either have it on an investing or a trading watch list. I think both of them are definitely applicable for Disney. Let's move on to the NASDAQ 100 NQ. And during our halftime report, as you guys know, we just work through the indexes one at a time and kind of look at some stocks that are a part of those indexes as we go, and then through commodities and the dollar and all those types of things. Usually every day. All right, NQ contract bear retracement developing, but different pattern than some of the others. Noah, give me a read on that chart.
Well, I'll tell you what. I see a possible forming head and shoulders with that pattern. It would have to come down, but that's what I see with that. Anytime I see a deep drop like this and that rally, and I see it down below some of the key moving averages, I start to wonder if that's what you're heading into. And that forming head and shoulders pattern doesn't have the classic slowing momentum before it, but
but who's got more conviction here? Here's a question to think about. Bulls or bears? Because the bears are going to paint an argument. Bulls are going to have their argument. Who would have more conviction to hold their opinion if they were right or wrong?
The bulls, I think, are slower to bail.
That's right. So the bears are going to come in on this pivot. You will get aggressive bears to start taking profit or even taking some of the positions on the short side of the market. But Noah, it has to confirm early next week, because if this thing starts green candle, green candle, green candle, those patterns are now at new highs, right?
Well, yeah, and the bears are they're going to concede quickly. They're not going to sit and hold their position because they're not long-term buy and holder types. They're not defending long-term investments. They're just taking a stab at a bear market, and if it goes against them, they're out.
Yeah, that's right. That's right. So you've got this short-term risk in the market right now that could spin into something lower, like a leg lower. There's no question it could happen, especially with negative headlines. Those tweets you're talking about, Cody, that could just fuel some fear, and maybe, hey, selling may go away. I think investors out there might say, I'm just going to take the summer off if they see another leg down. But it's way early to call that. The market could easily, and it's showing resilience today. We're only down 0.3. Go to the intraday here, Noah. There's no reason why, if the bears wanted to and they had true conviction for selling, they could have sold this open. They did not sell this open. In fact, they bought the open, and they look like they're buying a pivot right now. Yeah. Explain how that intraday price action works.
That's really interesting. Well, one, I'm looking at a chart it's a continuous chart, so it shows overnight. And with futures, you see market hours are where you see the high volume. And then in after hours, you see very, very low volume. And typically what you see is the market moves sideways. It might drift up or down, but then the opening bell opens and the market trades with some conviction. And then you see it drifting sideways, and then the market bell opens and boom, you see some conviction and movement in the market. So last night the market drifted down a little bit, and then right here at the open, boom, it rallied. See a bit of a sell-off early in the day, but then you might see a higher low. And if you see that, rallying back up towards the end of the day, that little higher low pivot, kind of work like that one back there. It's that higher low, and you see the upward movement there. We could re-challenge the yesterday's high. I think that would increase some of the bullish sentiment on the market heading into a weekend.
I would agree with that. It's really interesting when you think about this relative strength and weakness across different products. And yeah, the NASDAQ, they could have sold today. You could have taken profits. Apple's chart's ugly. I mean, go to Apple Computer. Just look at some of the big FANG stocks. Mixed information, between the FANGs themselves. Apple could easily have sold off of this news. They're holding up. You're below every moving average on a gap down earlier in the week that bear rallied back into the falling 50, 200, you name it. And we even had a doji yesterday, open lower, Noah. That's relative, pretty impressive that it's holding up like that.
Well, I mean, it is. And it's, very, very susceptible to trade deals, probably among, the corporations out there that's most susceptible, with all their manufacturing facilities over there. You've got a low flag pattern, but a lot of green candles in there, and it's below the 200 period moving average, below all the moving averages, but it's holding its ground. Mm-hmm. So I won't go bullish on it until I see it close back up above that 200 at a minimum. And I'm thinking the 20 and the 50 and the 9 as well. Mm-hmm. So that being said, the fact that it hasn't kept on selling, I think shows some resilience in the bulls.
I would agree with that as well. As I'm looking across many of them, interesting charts in some of the tech names. Look at Roku, kind of a high base type setup. And again, stock pickers market, you're going to find bull, you're going to find bear. After earnings post gap, now we're running. You've got some tails up in here. I don't know if that's a trigger I would take here at the end of, you got 3 hours in the market here on a Friday going into a weekend. Timing does matter. If that happened on a Monday, Noah, I might pull the trigger. On a Friday afternoon, probably going to pass, right?
That's important to know. I think that's a common sentiment among traders. I can't remember where I heard it, but it made me laugh a little bit. The only people still trading on Fridays are the ones who lost on Monday, Tuesday, Wednesday, and Thursday.
That's funny. That's a good one. That's classic.
Although you could play this on Monday as a new break above today's high.
Oh yeah, it'll be on a momentum watch list. There's no doubt. What I do with it, we'll have to wait and see. Look at Baidu. I mean, we might have buried the lead here. Baidu, talking about a $55 billion company that just lost 15% of its market share here today. And they had their earnings last night. And obviously a huge gap down. I kind of like the bottoming pattern in Baidu about a month ago. In fact, I played a bull call spread early April, and it just did not work. You have limited risk. You take a 1 hour risk. C'est la vie. That's the way the market is. But now here on earnings, you're seeing this thing gap down 15.5%, nasty gap down, Noah.
That's a gap.
Yeah.
That is a good size gap. If you don't have the scaling right on your chart, you don't really see how big of a gap that is. Mm-hmm. So yeah, that's a good size gap. I mean, you're talking 30 points overnight or 20 points overnight. Pretty healthy drop. And, small candle today, a lot of trading volume, as you'll often see with earnings, obviously. So I play this the same way as the other gap. I put a line in the sand at the candle high, the candle low, and I'll wait to see which way it trades.
This stock has lost $50 billion in market cap since the trade war started last year.
That makes sense. I can't imagine they wouldn't be absolutely crushed by the trade war.
Yeah, they're getting beat up pretty bad. These Chinese internet companies are all taking it on the chin. Tesla, we've got to talk Elon Musk and Tesla here today as well.
Do we?
We have to. They're in the news.
We have to.
Well,
every day.
I'm happy because I've got a bearish setup on this in my account.
And trade what you see.
Trade what you see. I'm happy there right now. So any bullish, sentiment can just go ahead, and I'm a bear.
Yeah. It's been a bearish for a long time. Lower low, lower high, lower low, lower high. Earnings did not save it. And then now just broke down below it. We've had it on bearish watch list here on the option report for quite some time now. Noah, that's just ugly. I don't know where the downside target is on our charts, but where would you target?
I'm targeting 200. I'm not overthinking it. It's a big fat number. It's got lots of downward momentum. I think they've got enough problems and issues. And I think that's just good downward momentum. So, it's cleared some lows. It's such a big support zone when you back it out and look at it on like the weekly chart. I mean, that 250 zone was huge. There's some other support zones down there, but I think 200 is just a big fat number.
Yeah, very, very possible. Take a look at some of our recent IPO stocks. Pinterest, PINS, had earnings last night, volatility candidate, down heavy at the open, but rallying very, very nicely intraday here. It was down about 15%. Now we're only down 11. I don't know what that means for this company. I'm still interested in this company long term. I do like the business model. What say you, Noah?
Well, this reminds me of what I typically expect from an IPO, ones that aren't overpriced like Lyft. But I expect that initial rally up because people
I like
are
a little jab there, by the way.
Well, you can't get a jab.
Ones that aren't overpriced like Lyft.
You see that nice little rally, and then you see profit taking, and it'll come back down. It'll settle. It'll find a support zone. And, usually what I want to see is I want to see a higher low, and I want to see it taking out some resistance after it comes down. But I don't know enough about the fundamentals of the company. It looks like they had a little loss on their earnings estimate. Came out a little worse than expected, but it's gapped down in an upward fashion. So, this is one I would have to watch before I pulled the trigger on it. But that's a pretty typical IPO pattern.
Here's what you have to know. It's a new IPO. We don't trade IPOs, so we're going to wait. Their sales year over year as they were getting ready to IPO, though, have been impressive year over year. They actually make money. The people who use Pinterest, probably your wife and my wife, right? And they tend to go there because women are the number one user of Pinterest, and women who actually have money and make money because they go there to buy stuff, Noah. I'm interested in the company. I'm going to keep it on my watch list. I haven't touched it yet. Personally, I'm just going to watch it. But you mentioned Lyft. Lyft to me is one that I am definitely watching here and looking at this bearish setup. Overpriced IPO. We know the story here, but now you've got a bear retracement developing into old support, Noah. It's a doji today, only down 2%. It's a little, in fact, if you don't look real close, you might not even see the candle because it's hidden inside that moving average. Give me a read on this chart.
There it is. I see it now. Yeah, you're right. That's a tiny little doji. I think you're right. It's a bear retracement. From what I saw in their earnings report, they lost a lot of money. And I don't have a lot of bullish confidence in it. I think it's going to head back down. So I'm watching for confirmation. I'd want to see it take out yesterday's candle before I triggered. You got clear entry and probably exit. You could use the candle high and the new falling moving average. I love watching an IPO, Tim. I love watching moving averages start to calculate in, like seeing the data actually pop in. So you can say, oh, now that's got enough trading data to actually show up on the chart. And then eventually you'll get to where you see the 200-day moving average start to come in, et cetera, et cetera. But I don't have a lot of nice things to say about this IPO. And I am in the bear camp.
Camp Bear, I'm with you there, my friend. Move on to Pacific Gas, PCG. And I want to just talk about this company very, very quickly. It had all of that negative news last fall. It then recovered there for a few months. And now you're seeing a precipitous sell-off in the last couple of weeks. And the one thing about a company like this, when you invest in a company that used to be a big dividend payer that still has all kinds of shakeout that could happen, Noah, you're taking a huge, huge long-term gamble. I had conversations about this stock a lot last fall with investors who's like, Tim, should I buy these shares? I'm conservative. And I'm thinking, this ain't your stock then. Obviously pretty ugly chart there, Noah.
Well, I think that I've seen more and more news coming out substantiating that they're responsible for all the wildfires.
Yeah.
They do have enough evidence in theory on the spark that caused the fires from their equipment. But I wouldn't want to be a holder on this at all. I find myself in the bear camp on this too. It's got some downward momentum. There's still enough bad press around it. I wouldn't want to own it.
Yeah.
But I certainly wouldn't mind shorting it with some reasonable stop losses.
Yeah. Did we talk John Deere yet? Have we talked tractors?
Oh dear, but we need to.
We need to talk tractors. Obviously, earnings. Whenever you're talking about trade wars, it's affecting farmers, productions, and profits in the U.S. But other people, they buy Deere all over the world, right? There's no doubt about it. Earnings gap this stock down as well, 6%. Another victim of the trade war, Noah. Seems like a theme.
Well, and a strengthening dollar doesn't help companies like machinery companies like Deere and Caterpillar and the like, because so many of their sales are international. Strengthening dollar, trade wars are going to kill that downward momentum. I mean, this is a falling knife. Don't try to predict the bottom on this. I would trade the momentum to the downside. You can basically take any momentum trading is basically anytime it takes out the previous candle low, you can trigger in and just trail your stops.
Mm-hmm. Yeah, I agree. Let's move on to the Russell 2000 index and take a peek at some of the small caps. And the RTY is in the middle. I know you're at moving average congestion here. That literally, they're all just kind of coming together here, Noah. If you tried real hard, you could make a case for nothing but neutral, correct? I mean, that's pretty much neutral until otherwise.
Would you have to try that hard to make that case? I don't think you would.
I mean, somebody could try to see bearish in there, I guess.
Well, I could see some bearishness in it because it's below the moving averages and has a bit of a kiss goodbye scenario there. I don't, your rut type companies aren't really susceptible to the trade war, but they are certainly susceptible to other economic, signs of recession and things. It is very, very neutral chart. I would probably put it on the negative side of the football field, but close to the neutral zone, maybe a -40.
-40. Yeah, it's kind of maybe -45 somewhere. I'd be right there close to you, I think, but I'd still be in somewhere in the neutral category. Move on to the dollar here. Let's talk currencies and then commodities. And we're a little bit over our halfway mark here, guys. And tackle trading, we love doing this every day. If you have questions, comments, put them in the chat. Let's have some fun, each and every time we come into the halftime report. In fact, put in hashtag Team Tackle right in the chat. That's our hashtag that we like to get out there on social media. $DXY, we're in an uptrend showing strength. To me, it's going to stay positively bullish and slightly bullish until otherwise noted. The relationship between the Chinese yuan and the dollar actually moved greatly overnight. I don't ever trade the yuan because the pegged rate and the way that their currency systems work, it's too manipulated, but the dollar stays bullish for me. What about you?
Bullish. I think it's got the right policy. I think the dollar's operating from a posture of strength in the global community, where we are oftentimes talking about the currencies being just who's the least ugly contest.
Yeah.
I think the dollar's had a bit of a makeover with the increasing interest rates, and I think that that it's still the strongest of the currencies out there as far as interest rates go. The carry trade is going to hold it up. People are going to hold that dollar against the other currencies because they want that carry trade.
Correct. And I don't know exactly what date I did the Forex report last month, but I did a whole deep dive on those currency rates and how they work around central banks around the world. Go back and watch that, guys. And that will help you understand that concept.
Speaking of that, Tim, if you didn't catch this last week's Forex report, I did a real basic Forex report for everybody who's not looking at the Forex report yet, just to help them understand how it works, how the pips work, how the position sizing works, because trading currencies is fun. Mm-hmm. It's simple. It's what you see is what you get. It's simple trend. It doesn't gap. You don't have to worry about volatility. You don't have to
really is simple. And there's a block that people think it's complicated because you're always comparing two cross pairs, but it really is probably the simplest, most basic form of trading. You simply
yes. So if you haven't checked out the Forex report, go check it out. I broke down how simple the standard mini and micro lots work, and how the minimum fluctuations in price work. And it's also something, if you don't have a lot of capital and you're trying to figure out something you can trade effectively, currencies, because it has the most customizable leverage. You get a ton of leverage, but it's perfectly customizable. Whereas sometimes options, if you want to trade a more expensive stock, the options leverage is a little too harsh for a small account. Yeah. So with Forex, you can customize that leverage so nicely, where you don't ever have to exceed a pain threshold when you use a reasonable stop loss.
Correct. I mean, look at AUD USD. We talked about this crosspair many times over the last month. Asian markets trade war, the Australian currency system out of Sydney, they're going to be moving commodities and products through Southeast Asia. AUD USD broke down. It's been selling aggressively. Look at the pound dollar crosspair, selling aggressively. We know the Brexit considerations. You can all try to argue the news about what it is and what it isn't. We saw the breakdown. You can just pull the trigger and trade it. I love the delta nature of Forex. There's no doubt about it. And it fits a role in a portfolio appropriately, if you know how to trade it. There's no question, in my opinion. Let's talk commodities here for a minute. Move on to crude oil. What is going on in Iran? Cody, explain.
People getting angry at each other.
It seems like that. U.S. Iran.
How far back in history do you want to go?
Yeah, exactly. How far back do you want to go? The recent stuff is still unknown. There are a lot of headlines coming out, basically, stating one way or the other what different people think, but there's not much substance right now. So it's hard to say that it's concerning enough to worry about or care about right now. But at the same time, if things get bad over there, then yeah, oil could start taking effect. But right now, just wait.
I think it's mostly saber rattling at this point.
Exactly. That's a good way to put it. No, that just they're making a lot of noise.
Yeah. I don't know. Obviously, the price action is not doing anything here today. I read the headlines, and hopefully we can avoid any kind of conflict. It might be, I hope it's just saber rattling. No, the last thing we need to do is go into another conflict in the Middle East or with a country that literally there's no reason to do it. I mean, I understand the economic sanctions. I understand the political sanctions.
If you didn't have plans this weekend, I couldn't talk you into invading Iran.
No, you could not. Let's stay the heck out of it. I'm just tired of it. The last 15 years in Afghanistan doing all the things we do, and I definitely applaud and I appreciate the efforts that our troops and our soldiers and our government has done trying to keep us safe. And I do sincerely say that. But if we can avoid conflict, I would love to avoid conflict with that country. There's no question about it. Crude light, obviously, you've got supply-demand considerations whenever there's conflict, Noah. And conflict can breed a spike in demand because of a lack of supply. If crude breaks 64.5 here, to me, there's upside. Now until it does one or the other, it's neutral, right? I've got a range between 60, 64.5, somewhere in here. Where would you pivot that? Because there's a tail on the red candle about 15 days ago as well. What would be a trigger right here?
I'd say 65 to clearing the high. I would be really personally gun shy to pull the trigger on crude light just because I have a very seasonal bearish bias.
Mm-hmm.
Now, if you get some news about conflict and things of that nature, that changes the ball game. But in the meantime, I kind of look at it as very neutral, as a kind of a sideways time correction. It is above those moving averages, but I don't feel the bullish love on it personally. And if I miss out on an opportunity, that's okay with me. There's other things I could trade that I have more confidence in.
Yeah. Gold and the metals markets are all moving down. We talked about that pivot. They rallied when there was weakness in the broad market and fear, but now it failed, and it turned over and red candle, big candle, big candle. Now you've got support here developing. I still have a neutral call on this. I know I'm probably going to have like a negative 45. I can't get bearish on gold. When I'm looking at it here now, if it broke support, Noah, I could. What's your read?
Well, it would have to break support, and then how much room do you have to that 200 period moving average?
Right.
It definitely has a bearish look to it today. There's that double bottom support back here at 1270.
Mm-hmm.
So if it comes into 1270, and I would like to see a setup so I don't feel like it's like swing range down into support. But I think that 200 period moving average is certainly something to pay attention to.
Bitcoin. Oh, Bitcoin. Here you are.
I haven't looked at the chart yet. I just heard a rumor that it went down a lot. Did it really?
Yes, it did.
So I saw a tweet today, Tim.
So wait, I'm going to get on Twitter and I'm going to call out some of these people who were last week or last 2 days. They were like, "Oh, you people who are bashing Bitcoin, look at it now." All right.
Whoa, yeah. What did I see?
God.
What did I see? It was a tweet that made me laugh really hard. It was, how you can't talk about politics and religion.
Yeah.
You can't talk about Bitcoin.
You can't talk about Bitcoin with people because it is their politics and religion.
It can be.
Yes.
There's no doubt. Yeah.
But come on, when something that doesn't have intrinsic or extrinsic value, well, I guess it has extrinsic value. That's really all it has. something like that can jump from 6,000 to 8,000 overnight, effectively a 33% increase. Do we really think it's going to just hold and maintain that? Or, no.
You sound like you feel good about this, Cody.
No.
Do you like the sell off?
Because there are, times that Bitcoin is absolutely tradable, and it's when it triggers and it does things. But when you have things like a giant gap run where people think it's just going to keep going to the moon, that just annoys me, because those parabolic type movements, we know they're not going to continue. And yet you do have people all over Facebook and Twitter, they're just the fantastic Bitcoin experts who say it's going to go back to 20,000. It's like, if it goes back to 20,000 in this motion, then I will short it. If it starts fading towards 20,000 and actually making a tradable pattern, cool, then I'll trade it. But right now, yes, I'm going to just be on a soapbox here, because this is ridiculous. This is not something I'm going to value. It's not something I'm going to go buy a house with or invest in until it shows some kind of pattern.
It reminds me of back during the Bitcoin bubble. Saw a person promoting Bitcoin on the internet, on the Facebook, on the interweb. They're saying, mortgage your house, take the money and buy Bitcoin.
Yes.
I'll show you how to mortgage your house and buy Bitcoin. And I'm just like, I'm a late adopter. I know, Tim, you've been an early adopter of cryptos. I'm a late adopter. I'm skeptical as can be.
Word is laggard, by the way.
Laggard, at this point in time, I may not even show up. You have to
And see, and I get on a rant about Bitcoin, but I'm not a complete anti-Bitcoiner. Like, I paid for my honeymoon through Bitcoin and Ethereum. Like, I got in and got out at a nice trade. But that's my point on this, is that if you're going to trade it, it needs to behave. But it's not behaving.
Well, my rule would be speculative money only. Money you're willing to kiss goodbye. Put it in there. Do what you want with it. It may make you rich, but you don't bet the rent money and you don't mortgage the house.
This isn't new, guys. Charles Mackay wrote a work that literally is 200 years old. Extraordinary Popular Delusions and the Madness of Crowds. I mean, human behavior hasn't changed in 2,500 years. It's adapted and evolved, and we have different forms of it. But you have mass hysteria and then fear. You have fear and greed. In fact, in the chat, put in fear and greed. And Noah...
Cats and dogs living together.
That's right. The blast out was beautiful. We've talked about it, but now the sell off is a little bit startling. I think with Bitcoin, one thing that to give context, pull it back to a weekly chart, if you would.
All right. Weekly Bitcoin.
Because day over day, Cody's 100% right. It was not sustainable. I don't know anybody who would have just chased it here, besides a gambler or the hysteria or the internet trolls there, Cody. But
my thought is everybody who bought Bitcoin back during the bubble is they're talking about it again. They've been so quiet for so long, and rightfully so.
They're still hoping it'll go back to 20,000 so that they can simply break even.
Hope is not a strategy. Yeah. No, hope is not a strategy for people. There's no doubt about it. The only thing I'm going to point out here is that the weekly action, we had the crazy gap out, and now we've had the crazy sell off on the day by day, but it still is a nice little developing trend, Noah.
Yeah. You can't say that. And I think what Cody said there, the magic word was parabolic.
Yeah.
When price charts go parabolic, you have to wait for a pullback if you don't want to get burned. And, I've seen it time and time again where people try to pick a top on something that's parabolic, but I think worse than trying to pick a top is trying to buy the stock that's gone parabolic. And that's anytime you see a chart just go like this, like that straight up move. That's a parabolic curve. They're unsustainable. They tend to come down, settle, and then maybe they get back to going up. But without that, parabolic curves are dangerous.
Yeah, I agree with that. Quick peek at the intraday on the S&P. Noah, we might be moving back into the green here today. We just did it. We're up 25 cents on the S&P 500 SPX.
Woo!
My.
Woo-hoo. Well, how about them apples?
How about them apples?
Did put in, that's exactly what we were talking about.
We talked about it. Yep.
High or low. And I'd love to see it testing those highs again by the end of the day to build the confidence. At this point in time, it's moving up, but it's doing so on a low intraday volume. And this is the time of day where volume is the lowest because all the power players are off at lunch breaks,
Mm-hmm.
You notice on the volume on the intraday chart here, it always does this little Golden Gate Bridge kind of drop where you just see that middle day lull, and then it'll go heavy into the close. And wherever it closes is more important than where it is right now.
Mm-hmm. 100%, 100%. Guys, it is Friday Fun Day. There's many things that we need to do, including get ready for our scouting report meeting. We got a couple of students joining us from Tuesday's coaches show. I can't remember their names. I was not there, but I saw that they did get the invite, going to be there. We're doing some things different in our pro content, by the way. Those of you who are pro members, you got to go watch the replay from Tuesday and Thursday this week, because Noah, you guys, you did a PowerPoint, I believe, and then you did some content after that. Kind of explain those formattings. Do you remember those students' names?
Batman and Michael S., I believe.
I'll look them up. I know they got invites, but I'll make sure I know who's coming. Yep.
But yeah, it's a lot of fun. We're basically walking through our playbook, Tim. We've got the tackle trading playbook, all the strategies, the basic rules. We've got really nice PowerPoint presentations put together by the artist himself, Christian Sisson, excuse me. I just called him Christopher. He's going to be mad at me. I should know better than that. But yeah, they're beautiful PowerPoints. They're really well done. It's the details. It's the simple format of the system, basic rules, what to look for. And we're going to be going through all of them. So on the coaches show, we did the long stock. We just did real simple long stock. And I believe in the cash flow club, did they do naked puts?
They did. Yeah. Coach Gino did last night. Yeah.
Okay. Which is just a promise to buy stock at the end of the day, but it's that strategy and learning the basic rules and building your playbook. You want to build that playbook full of strategies and understand all the rules and systems and test them out and find the strategies that work best for you.
Mm-hmm. And Diane, I appreciate that feedback. We've been thinking long and hard about it for quite some time. And obviously we do a lot. I mean, if you guys are a pro member, it's almost impossible to even absorb all the stuff we put out there. Most people have given me that feedback. If you're one of the few and rare, let me know. If you read every blog and go to every webinar and every show at Tackle Trading, I would probably say maybe take one of them off. You don't need to do everything. We've designed our content, Noah, to kind of have more than what any one trader can do, so they can pick and choose, almost like going to the buffet or something like that. The webinars at night we're doing for a specific reason, so that we can teach and have content-driven, ideas, and then also do the application. Now tonight, and by the way, if you've not watched the replay of the Coaches Show or the Cash Flow Club this week, make it weekend homework, right? Tonight, though, we have a very special event. I'm excited for it. I know that the student, he's never presented for it, so he's a little bit nervous. He's one of your own. He is #Team Tackle. He's halftime crew. He may not be here live because he usually watches the recording, but a student I mentor is going to be doing a Mind of a Trader, Cody Potter, Noah, and he's going to be teaching people how he does his daily report card, which is a way for him to stay organized. And he's one of the most organized students that I've ever had, quite frankly, and he's built that. And so we're going to have that tonight at 8 o'clock Eastern time. I'll be there to open the room and present Cody and kind of intro him. But if you can join us tonight, great. If not, catch the replay. We'll get it posted over the weekend. Noah, there's 10 triggers on the option report today. If you guys haven't gone back and reviewed your watch list, I'd go check them out before the close here today. And there are 9 triggers on the stock report, Cody. There's a lot of stuff flashing, and we're going to go find some new stuff here as we get ready for our meeting. Cody, any final thoughts here for the team?
Watch those reports this coming weekend. With a market like this, I guarantee we're going to have both bull and bear setups that are just beautifully from a technical standpoint. And then watch those triggers. We really do take the effort to go into where we're triggering, why we're triggering for each and individual pick that goes on those reports, and they work. All the coaches that have done, back testing and data on those show that if you were to literally able to trade every single one of them at the triggers and stops that we set up for you guys, that you'd have a profitable portfolio. So definitely get over there, check those out, watch the videos, let the coaches tell you why we picked them, and then simply wait to trigger in until they set up. Because if they don't, it doesn't matter. You never got in. But watch those picks over the weekend. That's easily the cornerstone of tackle trading, and it is the best thing that we could ever do, and they need to be utilized. Because anytime I'm seeing them not be used. It's just like you're missing out.
Yeah. And Marie, today's meeting ought to be really good. It's going to be real good. Yeah, I guarantee it, because I know Cody and I'm going to be there to make sure that we kind of present the idea. It's a simple concept when you think about it, but a lot of traders struggle with organization, Noah, even myself over the years. I'm so anal about everything I do now because when I was brand new, I was disorganized, and there was a learning curve to it. And as a mentor, you've probably seen that, right?
Oh yeah, absolutely. I personally live somewhere on the border between chaos and order, and I constantly struggle and work on organization.
Yeah.
And it's not my strong suit. It's not my natural skill set, I don't think. And I've had to learn how to do things, and I've copied what other traders have done successfully. My what I would say is don't reinvent the wheel. Watch Cody's report tonight and see what he's doing on a scorecard and copy it. Adopt what you like.
Yeah, I agree, guys. Hey, everybody out there, thank you for being a part of Tackle Trading. I'm going to tell you one thing I do during my days is after the halftime report, I take a walk. So if you're out there and you've been in your chair all morning working on the markets, looking at this market kind of flat, maybe take a 5-minute walk around the block, refresh your brain, catch some fresh air, come back and crush the last couple of hours. Great job, Cody. Great job, Noah. Guys, we'll be back here on Monday with our halftime report, and we are out.